Welcome back to Fast Market. I'm Diane King Hall at the New York Stock Exchange alongside Kevin Hings, who's over at the Seabowl. Time now for our cash tag segment. For that, I want to bring in our next guest, Landon Swan, co-founder of LikeFolio. We're taking a look at American Express. Takes center stage tomorrow with earnings on tap. Street projecting adjusted EPS of 34 cents a share on revenue of more than $43.6 billion. So, Landon, let's start out with just what your take is on Amex as we head into earnings.
Yeah, I mean, look at last earnings. They came out and they raised guidance on the quarter and the next quarter based on efficiency, but they lowered guidance on revenue, which, kind of a mixed signal, and it sold off a little bit. I think it went from maybe mid 280s to around 270 or so, but that was then, right? Now we've run up to all-time highs, hit all-time highs today, up in the 325-ish range. So expectations are very high for this company moving into earnings. And, I think a lot of it, if you look at, what they're doing, it's pretty interesting. They've really kind of focused on the gold card, the younger members getting into gold cards as opposed to hitting everybody with platinum. So just so viewers understand, I mean, platinum's that's the higher limit, the more spending, you're going to make more money. American Express is going to make more money off their platinum cards. But if you get the younger generations in on gold and let them grow into platinum over time, their theory is that they're better lifetime customers, they're more value, they're more loyal. And so they focused a lot of attention on that. In fact, gold memberships grew at 3 times the rate as platinum memberships. And 80% of new gold memberships were in the younger demographic, millennial, Generation Z, that kind of thing. So it's really an interesting strategy from them. And, so far, I think the street is really liking what they're seeing. Now, when you look at, one of our data points that we like to look at is web visits. I mean, when you're thinking about signing up for a card, you compare, you go to the website, you look at the perks, you look at the rates, all of that. And we're looking at the major cards here, and you can kind of see that there's a general downtrend among the big four. American Express is not the best one. That's Visa. That's that blue line. That's actually the only positive one on a year-over-year basis. So Visa's at +7, American Express -8, MasterCard -10, Discover -19. They're the loser of the group. But they're all kind of trending in the wrong direction except for Visa. And when we look at what's Visa doing differently, it's really about their partnerships. So they've done a lot of, they're attracting international clients. They're also hitting up partnerships. AXP is one where you can pay your rent through Visa. And as you can imagine, that's obviously very steady, high dollar numbers coming in through their platform. So that has me hesitant on American Express. Side note, Visa also all-time highs today, so they're crushing it as well. But they report next week. So sticking to American Express, I think that when we look at how well they've done, their stock is up 66% on a year-over-year basis. Visa's, who we think is doing a little bit better, is only up 42%. I think the value is out of American Express. I think as a trade, it's getting a little rich. Long term, I think it's a great play because their strategy is really smart. I mean, they're attracting, again, these lower tier customers who aren't going to spend as much now, but are going to stay loyal. And as they advance throughout their career, they're going to move up into platinum and spend a lot more. And so it's a smart investment into the future. And I think that the street realizes that that's a smart play, and that's what they're looking for. But right now, the stock is really, really high. I would be a buyer on dips if we see one. It's easy to say that at all-time highs, so we'll see what happens tomorrow after the report. But right now, strong company, being outperformed data-wise by Visa, and at all-time highs with a good long-term strategy. That's kind of the summary of American Express.
Landon, you bring up a lot of points that are very interesting. Number one, Visa and MasterCard are similar, and American Express is similar but different to them. Why? Right? Because they hold balances. So they do better in some markets and worse in others. The key is to determine now which market are we in. Are they doing better because they hold balances or worse? The stock says they're doing better because they hold balances. And then getting young, affluent members to hold their gold card is a great business plan. But as you know, Landon, it probably ups the percentage of defaults slightly because you're going to get more hit and misses with young people than you do for established affluent clients like they normally concentrate on. So it's good for numbers, but it also may be bad in terms of default. Then the last thing that is one of the most important, because we're traders here, the stock. It's overbought on a technical basis. It's up 74.9% in the last 12 months. Can it keep going, Landon? Because you're right. You look at that chart, you look at what it's done, and remember, they're susceptible to an economic downturn just like any of these cards are. Your thoughts, Landon, on where we sit right now? Because I look at everything on that chart, it makes me pause.
Yeah, absolutely. I'm not a big believer in efficient market theory. I don't think that all the information's out there. If it was, what is it that's telling us that this stock is worth $40 more than the last time they reported earnings? I mean, they sold off on earnings last time, 284 down to 270. Now they've screamed up another 50 points up to 324. So it's getting up there. And once you have to understand. As a viewer, you have to understand that when stocks are high, it's because people have high expectations. When you have high expectations, you buy the stock, that forces the price higher. So looking at the stock chart, you can actually read what expectations are, and they're very, very high for this company. So that means it's going to be more difficult for them to meet the bar, to satisfy those high expectations. I'm not saying they're definitely going to sell off. Our earnings score is actually a +10 on it, which is neutral, but it's on the bullish side of neutral, so it's pretty decent data. It's just the pause from the stock has really pulled that score down. The other thing, when we talk about the long-term value of this company, the strategy revolves around getting all these gold members in, which, you talked about some of the cons, but another thing to think about is they're really betting on their retention rate. Because maybe these gold customers do move up into that sort of platinum category, but 5 years from now when that happens, what if Visa or MasterCard or Discover has a better offer for them? They'll switch. I mean, American Express has a great customer service experience. They have very high happiness on our scores. So I'm not saying that they're not able to retain customers, but they're definitely putting a lot of eggs in that basket of, we'll hold on to them. We'll get them in the system now, and when they move up, they'll stay with us. And it's probably true for the majority of their customers, but they're definitely going to lose some. So going for some of the older clients that are straight into platinum and are going to spend way more than the gold clients could be a smart strategy for the short term. The long term, they're really betting on that customer retention. So that's the only pause long term, and then of course the short term pause is the stock price. It's just really, really high.
It's an interesting point that you made about that strategy, and obviously they're going to need to do something strategically, especially when you mentioned, I didn't realize that about that Visa partnership where some of its customer base will pay their rent through it. Obviously that would be a strong point for Visa, because who's not going to pay for to have a roof over their head? There was some data I saw, this was out from the Philly Fed, Landon, about consumers and servicing their consumer debt. Now obviously Amex is looked at as, they have the well-heeled consumer. They are going to service their debt. But there was an increase in the number of delinquencies and people paying just their minimum. It's the highest level since 2012, still nowhere near what we saw during the great financial crisis. Is that something to keep as a concern point for Amex or in general for this sector?
Yeah, in general, absolutely. I wish we had the chart that shows the amount of savings per the average U.S. savings account versus the average U.S. credit card balance. I mean, it's unbelievable what happened in 2020, and just the shock to the system that took. Those lines started moving. The savings balance went straight towards zero, and the credit card balance is going up towards infinity. They are moving very quickly away from each other. So it's definitely a concern overall. And it's a lot of it is just whether or not you're betting on the economy to move in the right direction. There's a lot of potential things. We've got a new administration, and who knows what's going to happen. I'm bullish, but who knows what's going to happen. So it's definitely a concern overall for all of these companies. But what a great business to be in. I mean, they're just taking a piece out of everything. It's incredibly. It's kind of a can't lose situation for them. It's just how much can they make. But yeah, absolutely, it's definitely scary to know that consumers are getting more and more squeezed and getting a little bit tighter. Their savings are down. Their credit card balances are up. So it's always a concern. But it's a bet on the economy or against the economy, really.
All right, bet on the economy or against the economy. All right, that's Landon Swan, co-founder of LikeFolio, with some insight and consumer data when it comes to American Express. So, Kevin.